Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, October 25th, 2022. Before I jump into the charts, just want to please encourage you to click like each and every time you watch Wicked Stocks content that's uploaded to our Wicked Stocks YouTube channel, including the daily Tesla report. This, of course, assumes you like the work that you're seeing here. We really appreciate the likes as much as we can get them. Subscribe if you have not. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new daily content has been uploaded, and we are uploading at least daily. That includes the daily Tesla report. And please share the videos with friends and colleagues. Let's take a look at the chart. I'll talk about this just briefly, that the 206.85 May low, we've been breaking below it. We settled below it a little over a week ago without any downside follow through, came springing back. I still have that as our downward pivot point through the rest of the week. Until then, we can quite easily rally back into the mid 220s over the next few days. In fact, possibly today, if, I'm going to show this one, if, for instance, let me slow down here just to mention that this is a very short-term channel structure, just based on 3 days of activity, but I still want to weight it as a session containment level, because I think that opening above it, for instance, which is quite possible, we actually settled above this, how should I say it? We didn't settle above the formation. The formation was in the 212 handle on Monday, but it drops to 211.24. So we could quite easily, just an unchanged open would have us open above 211.24, and we could rally right off of that alone. So 211.24, if opened above, decent support for the day. That could call the low of the day, and we could, within the day, under this kind of volatility, rally all the way up to 225.17 today. On the way up, I've got 217.89 as an intraday resistance area. That is, by the way, a 5/8 upside Fibonacci over the last 5 days of activity. That includes, what is this, Monday, Friday, Thursday, Wednesday, last Tuesday's high against Monday's low. Monday's low, by the way, at 198.58 is the lowest this stock has been since the all-time high from almost a year ago. It was in November of 21. So, pushing or opening above 211.24 should yield at least 217.89, and I think you need to make way for 225.17 on an intraday basis. There should be hesitation on the way up at 217.89, but beyond 217.89, 225.17 is very likely, where we could actually place a weekly high, and from 225.17 fall off and perhaps take out the low that was put out on Monday within 3 to 5 days of testing 225.17. We could still trade inside the 206.85 May low to 225.17 formation. We could trade inside that zone all the way through the rest of the week. But if we do close above 225.17, and I think that's a long shot today, but we may well close above this 225.17 channel top as we continue into later week. And if so, this market has indicated a good October low, and we should, over the following 2 to 3 weeks, push into the mid 260s. There's a lot going on here, I'm not going to say too much about it, but it's mid 260s and mid 270s as a significant zone of midterm resistance that, if tested over the next few weeks, can absorb buying into December trade, and we could fall off from there. And once again, it becomes a target if we close above 225.17. On the way up, worth mentioning that 237.42 is a quick 1 to 2 day target above 225.17, and we could top out here on a daily basis, as you can see up here. But once again, closing above 225.17, 264.54 considered a 2 to 3 week objective. Now, downside, and I'll go back to this chart here, opening and holding below 211.24 will keep heavy weight on the market for the day, easily testing the 206.85. I'm keeping 206.85 as a 2-star support, really, if we close below it. I don't like to encourage aggressive buying of it because I think overall this market remains weak following that longer-term sell signal a month ago when we gapped below this speed line that is now at 273.82. then indicating not only a retest of the May 206.85 low, but ultimately this channel bottom structure that is presently between 175.76 and 183.87. On the daily chart, you can see it's a little different, and I can show that on the daily chart right, where are you? Here. 175.94 to 183.34. So, if we close today below 206.85, we should, by the end of next week or sooner, continue south into that 175.94 to 184.34 area. On the way down today, if we break or open below 206.84, 202.12 in reach, able to contain intraday selling. If we break 202.12, expect 197 even intraday. We came close to testing 197 even yesterday. And once again, it is nothing more than this pullback low on the daily chart back in the spring of 21. We came very close to testing it on Monday. It can contain session weakness, and if we close below it, expect this lower area here, 175.94 to 184.34, within just another day or two of trade. This lower area is considered a big picture objective following that sell signal about a month ago, and can absorb selling through the rest of the year and quite possibly through Q1 of next. I'm trying to think if there's anything else that needs to be said. All the minor points have been carefully chosen. They're all very tradable. But bottom line here, pretty solid pivot point today at 211.24. Pushing or opening above it allows 225.17 intraday. Opening below it will keep 206.85 in reach. If we break or open today below 206.85, expect at least 202.12, possibly that 197 even intraday. And final thing I'll say is, once again, closing below the May 206.85 low will keep that longer-term objective to the downside at 175.94 to 184.34 in reach by the end of next week. And that is all I've got for Tuesday's Daily Tesla Report. I'll be back tomorrow, the Wednesdays, and you have a great day.